strategist at bullseyeoption.com. So Alan, obviously this morning we got a little swinginess, and last week we ended on the lows of the year. What do you make of that?
Well, I didn't like the follow-through. We didn't have any follow-through through that 4,400 level in the S&P, which is what I was looking for. So it was a test and reject on the upside of the range that we've been in. We've been between 4,200 and 4,600 now for 6 months or so. And we didn't get above that 4,400 midpoint. So that was disappointing to me. Now, this week, we're testing the downside of the range. We're testing the 4,200. So let's see where we are by the end of the week. I'm going to let the markets tell me. I'm not going to whip myself into a frenzy like you and Alex did about treasuries and what impact that's going to have. That was some heavy thinking, but I'm going to throw something out there for you. From 1980 to 2005, the 10-year note yield was above 5%, and the markets did fine, and we did fine. So let's put that out there just to chew on.
Okay, I like that. Well, how does that taste when we chew on it, Alan? Well, what's the aftertaste?
Well, no, but this talk about treasuries and yields, and we're trying to normalize yields. And Alex did say that, 15, we're back to where we were approaching where we were 15 years ago with the way the treasuries were acting as far as the curve and so forth. And, we were in an inverted curve for so long, and we didn't go into recession. So you can't have it both ways. So now that we're coming out of that, that should be viewed as a positive. And he was talking about how the Fed was saying that we're not going to raise rates maybe one more little time. But if you look at it, rates are in the 4% range down at the end of 2024. That's what the markets are telling us. So, you can't have it both ways. The market, we have strength, and that's why there's still talk about we might have to raise rates again.
Okay, and that is kind of lingering in the background, We're around that 40% mark, but as Alex pointed out, the 2-year pretty chill, so no panic around a hike incoming. Hey, in the meantime, it hasn't broken the consumer. Last week's retail sales were red hot, and it seems like it caught your attention.
Well, yeah, I just trade what I see, and this stock popped up. As you could probably tell, I'm not extremely active.
Well, I don't know. You got a yard. You're active between houses. I know that much.
I travel. I'm an active traveler, but I'm not physically active. I live a pretty sedentary lifestyle. But anyway, Under Armour is the play. This is a stock that made new decade-plus lows here just 3 weeks ago. I went down to 627. We have a little bit of a bounce. We made a base. And I saw what I want to see. I saw bullish divergence, meaning we made new lows, but not new highs and implied volatility. That tells me there's a sentiment shift. This stock was at 13 in February, so it's 45% off that February high. It's made this great bottom basis where it's been trading between 6 and 8 now for 6 months. This technically is what I love to see. I see this bullish divergence where you see the sentiment shift, and you're also seeing leveraged positioning here, leveraged bullish positioning using options, which is very much a positive. So a number of things, a cheap stock, and I'm looking to play it with the June option.
Okay. So the little bounce here in the past week helps it get up off the 52-week lows, but your strike is below that 52-week low. So you're just, as long as you don't get a breakdown.
Well, what I'm doing is buying in the money option that's going to act like the stock. You could put in an order to buy, buy shares at this level, but I'm looking at buying the $5 call for June, which has 8 months of time. We haven't been down to $5 since, I think, 2010. So you have the right to be long from $5. And again, we've had a pretty healthy bounce, a 10% bounce. 15% bounce off that low just 3 weeks ago. So you're seeing some reversal. And what will happen is with this downward movement that we've seen here, that a lot of people that have profits are going to lock those in, move their stop losses down, and that can feed it higher as those people realize those profits and protect their gains. So that's what I'm looking for here. The $5 call is $2.25 in the money. Like I said, what do we got here? 6 months of time, 8 months of time, I'm sorry, for June. And the expiration break even is only 50 cents away. So if it just gets to 10, which is that target here from that sideways range, then that option gains nearly 100%. Okay.
So you're taking a stab here at the laggard of its sector, essentially. Yes. But, how different can it be, from a Lulu up near the highs and on. I mean, yeah, history has
know
told us that, they're the laggard, but.
Yeah, I don't know what's going to happen, but I see it in the charts, and someone is accumulating bullish positions in this stock. And like I said, it's at a decade-plus low level. So I like it from a probability standpoint. I like it from an odds standpoint. And I like what I see in the charts in the fact that it made those new lows, but not new highs implied volatility. So the fear factor wasn't there, and the psychology has shifted on this stock. So a modest move in this stock will produce a very healthy gain in these options, and that's the way to play, using options as a better way to trade.
All right. Nice. Like it. All right. Thanks, Alan, with the in the money call option, looking for Under Armour to join its athleisure pairs. And by the way, you don't have to be active. You could leisure. You could athleisure.
Right. I'm more of the leisure side of that athleisure.
All right. Thanks, Alan. Chief Market Strategist, bullseyeoption.com. All right.